Hi, this is Jim McNees with Guaranteed Rate Mortgage, and this is number 13 in my mortgage tutorial. And I'm going to discuss the function of three acronyms you hear a lot in the mortgage industry, and most people don't understand who and what they are. And that's Fannie Mae, Freddie Mac, and Ginnie Mae. Fannie, Freddie, and Ginnie. And they serve a very key role currently in the mortgage industry, and I will discuss what they do and what their purpose and function is in the mortgage industry. Okay, so what and who are Fannie Mae and Freddie Mac? What is their function in the mortgage industry? There you see the logos for Fannie and Freddie. Fannie Mae stands for Federal National Mortgage Association. Freddie Mac, Federal Home Loan Mortgage Corporation, FNMA, FHLMC. Fannie and Freddie are government-sponsored enterprises. You'll hear GSEs. That means that they are privately owned but receive support from the federal government and assume some public responsibilities. So they're a hybrid between private and publicly run. The GSEs provide a secondary market for home mortgages. They purchase mortgages from lenders like Guaranteed Rate, who originate them. Once a mortgage is originated, lenders have a choice. We can either hold the mortgage in our own portfolio and service the mortgage, or we can sell the mortgages to the secondary market investors, such as Fannie and Freddie. When lenders sell the mortgages, they replenish their funds so they can turn around and lend more money to home buyers. Many times, a mortgage company will service a loan and keep it under their portfolio, or they will sell them off to the secondary market, and normally it is a profit decision. Can the mortgage company make a profit from servicing it, or is it better to sell it off in the secondary market? The main difference between Fannie and Freddie comes down to who they buy mortgages from. Fannie, mainly commercial banks. Freddie, mainly from smaller banks or thrift banks. Mortgage companies lend towards Fannie and Freddie guidelines set forth by those two organizations. These loans and guidelines are considered conventional loans. VA, FHA, USDA, and others are considered government loans. One of the things that's important when originators originate loans on the conventional side, we have to study the Fannie and or Freddie guidelines to make sure that these loans meet guidelines and stay within tolerance levels of the conventional mortgage industry. So that is another huge task and function of Fannie and Freddie, is to set guidelines for conventional loans that us originators and mortgage companies have to abide by. Okay, moving down the line, what and who is Ginnie Mae? Ginnie Mae is the Government National Mortgage Association that backs government loans. So Ginnie Mae's mission is to expand affordable housing finance America by linking domestic and global capital to the nation's housing finance markets, providing liquidity to federally sponsored mortgage lending programs. So the big difference between Fannie and Freddie and Ginnie is Ginnie backs government loans, Fannie and Freddie conventional loans. Big difference. They both set guidelines. Fannie and Freddie for the conventional. Ginnie Mae sets the guidelines for FHA, VA, USDA, and other government loan programs. Thanks and have a great day.